Hey guys, welcome back to the Capital Mindset Show. Today's going to be an update video on a variety of stocks. So if you guys watched the live stream last night, I'll give you a quick rundown if you haven't. I'm going to be changing up the structure. So what I'm going to be focusing on is more content surrounding analysis, and then update videos occasionally will be like this. It depends really on the update. If something drastic has changed for a company, I will do just another analysis video, kind of an update like that. But when I'm going to do updates like this, and also announce a couple stocks that I'm going to be looking at later this week, and you'll see individual analysis on those companies. Of course, that doesn't, it's kind of a given, the one that won the vote in the Discord, that I'm going to be covering that stock or that topic. And the one that won this week was the Dean of Evaluations analysis on Tesla. And I'm also going to be covering his analysis on Facebook, Netflix, and a variety of other companies. So with that being said, we're going to move on to the first topic at hand, and that is Intel. If I share the screen here with you guys today, you guys can see that Intel's PE is at about 6.85, dividend yield about 3.54%. It is down 5.34% here today. If you actually take a look at the 6-month, it is still down 20.38%. If you guys are curious on my previous thoughts, you can go to the content library. It's actually in the description below. You press Control F. So if I'll show you here, Control F, you type in INTC like I have done. It highlights it for you immediately. It's not case sensitive, and you can see all the videos. The video I recommend the most is April 30th, 2022. That's a pretty good video as to kind of get you up to speed. In summary, I'll kind of give you the quick rundown. I thought that Intel would underperform overall. And I didn't agree with their capital allocation strategy. There are some hints that they might be cutting that dividend. I saw a subscriber really mentioned that they might be cutting that dividend. I couldn't find any information regarding that, so I'd love if anyone could confirm that down in the comment section below. All right, so I basically plugged in Intel into the model already for us. It's the first stock that we're going to cover, and I'm going to be actually changing up some of these numbers, so they're not going to be dilutive. I think they're more likely going to be kind of standard right now. They cut the buybacks for now. Well, actually, I do think they are going to do some form of buybacks over the decade, so we're going to include it a little bit. Now, in terms of growth, let's say we don't need that much of a margin of safety at the present moment in time. Let's see what kind of we're priced in for, and I do believe for this company, we're going to have to adjust the cash flows and normalize them. Okay, so then that's good because, and I did that on the side, by the way. I know I zoomed out. So I'm zoomed in for mobile users. So I just did that here on the side. I indicated to the model that I would prefer. And by the way, because I know I've been getting some questions, so kind of quick side comment. The progress on the models for the app version or implementation on the website is we've made a lot of strides. So we're actually going to be up and running probably before, but no promises on that. We're going to open it up to alpha testers soon. And then when that's done, we're going to open it up to some initial users because we're going to have to scale it in. Okay, so it's not going to be as easy. We can't accept 1,000 people. We have to kind of scale in. We can't just do all at once. Okay, so but thank you everyone for your patience on that. This is going to be almost able to use by everyone and anyone who wants. So required rate of return, we're going to imply about a 15%. We're going to assume some level of capital return in the form of buyback, so a little bit there. Now, in terms of growth rates for Intel, we have anywhere from a possible 15 to 12%. So we're going to do a 15% there. We are going to use the custom weightings. And on that front, we're actually going to say, okay, well, what else can they grow? Let's say they can probably grow at 10%. And then what I'm trying to highlight here is the potential for some good performance if they can grow just something they need. Okay, we're basically almost at the point where we can price in about a 2% growth. And again, this is after normalizing the cash flows for these anomalies that are kind of occurring. Actually, I'm not even eliminating an anomalies per se. I'm basically just normalizing for the investments that they're making right now. So the investments that they're making at the present moment in time, I agree with, and that is the foundry business and a variety of other technological and R&D investments that the company's engaging in. So we can't punish it for that. I don't think we should. I think that those investments should bear fruit in the future. Now, sentiment score, if you can see down there, is actually ranking out about above a 1. So this is probably retail sentiment, because if we actually take a look over here, yes, it's scoring there. Those are the most recent mentions on Twitter, Reddit, StockTwits, Yahoo Finance, none, but whatever. And then the overall internet sentiment is coming out at about 1.00996. So that's basically positive. Now, if we actually take a look at the titles in the most recent articles, have any articles been posted today? Yes, we have 1, 2, 3, 4. Wow, a ton of articles. This is talked about quite a bit, okay? And we'll see from what websites, none from, one from Seeking Alpha, Intel forecasts, whatever. Okay, so let's actually just see what this is saying. Intel, don't catch the falling knife. Okay, so this guy's kind of bearish already. Intel forecast weaker than blah, blah, chip giant continues to lose market share. Okay, so all negative stuff. Okay, but that doesn't necessarily mean it's a bad company. It's just a way for us to kind of see what articles are saying about it. So let's actually go over the ratios again. So the ratios, we've covered it in the past. Solvency ratios, a lot of them are getting worse. Liquidity ratios, a lot of them are kind of staying the same. Cash ratios, what got worse. Let's actually remove the noise of the past 10 years. Let's stick to 5 years. Looks pretty good in this picture. So basically liquidity ratios, cash ratios remained about the same. Current ratios improved actually. Solvency ratios remained about the same for the most part, except for a couple. And by the way, you guys can see on the column right here, which is better. It automatically indicates to you, if you take a pause here, you can see, okay, that's better than that, that's worse than that, or it's getting better or worse. Earnings quality down at the bottom, it's indicative that they've been managing it pretty well. ROIC has been pretty good, but declining, but better than 2017. Now this is where I'm going to bring back the noise and see what's been going on. Okay, so rise, decline, rise again. Okay, and probably it's going to somewhat decline now. As we look at ROA, ROE, okay, so that looks pretty good. Free cash flow margin looks pretty good, but declining significantly. That decline right there in 2021 is because of all that investment that they're doing. So we got to actually keep an eye out for that. Okay. So with that being said, we're going to move over to the final points made by the summary. So what I think is Intel is now priced pretty cheaply. It's getting interesting in terms of a margin of safety perspective. If we want an even greater margin of safety, I'll kind of show you what prices you kind of have to expect with the growth rates applied. I know that this is a popular stock among some of the larger YouTube channels, such as Everything Money. I'm completely aware of that. We talk about it all the time in the Discord community. And the price point now is much better than the price point they were buying. I'll tell you that. And again, in hindsight, what I did was a smart move when I sold it in the 52s around there. And regarding the performance thus far, I think is reflecting the business's decisions and the macroeconomic environment that we're also in. So all that culminating together, I think today, quite obviously, the price is better than it was before. And so you might want to consider it if you're really wanting to invest in Intel. I think now is a price point where it can be a decent investment. Okay, it can be. And I think because there's a price for everything. Remember, I implore everyone watch the video, the one that posted in April, because I discussed a lot of the risks in there that I won't cover in detail here, because it's not that kind of video. So the next stock that we're going to actually discuss now is Thor Industries. So Thor Industries actually just reported earnings today, and they reported earnings this morning. So they had a crazy good backlog, and I'll kind of repeat some of the information that we saw. But they actually came out with $6.32 earnings per share. This was above about a 1.58 above estimations, so $1.58 to be specific. And we're still talking about EPS. So they also had a 34.7% increase in net sales, so it totaled to about $4.66 billion. I mean, we are talking about a quote-unquote small market cap company. Gross margins also improved by 270 basis points. That was good too. And so I saw that some of you were kind of interested in the stock when I talked about it back in the day. Again, if you're curious, I'll actually walk you through what we would do to find this. So if we go to the content library, we come here, Control F, we type in THO, boom, we find it. We just click here, we click Thor Industries. It will take us right to the video, and you will see the date, March 29, 2022, has chapters and everything. Look at that. So in essence, to summarize this video, I kind of remember it, but I don't remember every single detail. But in this video, I did talk about how I was buying Thor Industries. It's in the portfolio. You can also check the portfolio out. And my issues with Thor Industries was the macroeconomic backdrop. So I like the company and all that. And actually, it was actually at a larger holding, and then I talked about it in a live stream where I kind of reduced the holding. Now I might actually buy some more because now it's actually lower. So I think the allocation I have to it currently is responsible and nice. I did have some concerns regarding the liquidity crunch and how that might affect Thor Industries. They seem to have a very strong backlog of orders for their size, especially when you consider, well, they are the leader. They dominate the industry that which they're in. And the second largest competitor is actually owned by Berkshire Hathaway. It's a subsidiary of Berkshire Hathaway. So Thor Industries is a conglomerate of many brands within this industry, including Thor brands. Okay, so just keep that in mind. I also want to actually highlight that this video, or the video I just showed you, covers a lot about the risks, and it almost sounds like I'm very bearish in that stock despite me saying I'm buying it. So I like to think that I try to cover things in an unbiased way. Despite me being bullish on something, I can completely kind of get together with what the risks are in that. All right, so we're going to take it over to the evaluation model and kind of remind ourselves what it is. Has anything changed in terms of the price? So I don't know if the data necessarily has come in, but I'm just going to refresh our minds into terms of this. So we're going to actually remove this and remove this. Okay, because we don't really need to do any of that. In discounting it at about 20-ish%, we can kind of see that the price point is kind of compelling in the 70s because the growth rate, I don't think it's going to be necessarily 15%. If we kind of reduce that margin of safety, you can kind of see that we're pretty much in the 6% growth category for this company. So that's pretty good. They are going to probably issue some form of capital returns, but let's remove that just to be safe. And then you kind of get back to some of the previous assumptions that I was generally making. So I would love to acquire this company more in the 60s if the market does allow for it, but I'm completely content with my current allocation. I might nibble a bit more, might bring it up a little bit more in terms of percentage, but I have to keep in mind that it is a supporting position within the portfolio. It's not a core position. It's a business that I appreciate. I like its role that it might play. It basically gives me exposure to that discretionary spend category within the consumer. So if I'm necessarily incorrect in some avenues of my other investments, that consumer discretionary spending will kind of collapse and there will be other consequences, then this kind of will also be a beneficiary of that. Of course, there are some scenarios where both can kind of suffer, but it kind of gives me exposure to a different scenario playing out. So the other topic of conversation, I think, is going to be about, not I think, it's planned out to be about BABA. So if we actually look at BABA stock, and I'll actually pull it up here, it is up nicely today. And if you guys remember, it is part of the portfolio. I have made a commitment not to talk badly about the VIE structures until the stocks have actually recovered. So I'm not going to be talking bad about it, but I'm going to be talking about the general thesis. So again, to kind of walk you guys through it, we go back to the content library, Control F, you click BABA, and there are tons of videos on BABA. May 27th, April 12th, but there's also, I think I definitely missed one because there are two that were right next to each other. Oh, no, it's these two. So I think one of them, yeah, these two are there. I think this one is let me click on this one. Okay, so the year of BABA, yeah, this is the one. So this one was posted on February 4th, 2022. And basically, you can see by the title, the year of BABA. This video actually did pretty good because I think Alibaba is a popular stock. So the 2022 is the year of BABA. Basically, in summary, what I kind of discussed here is that this company is basically ruled by the sentiment. The sentiment drives this company. And I further reiterated this in the videos following that. So March 15th, March 16th, I believe those are the ones. I think, let me click on this one. Watch this before buying. Yeah, it is this one. So it's a 52-minute long video. So it does have chapters, but I do go over into specifically what I think about Alibaba in terms of sentiment drive. And then what was funny is the day after I said that, I had to make this video because the CCP actually came out. Let me pause that. The CCP actually came out and did something that actually drove the sentiment to the positive, and the stock actually jumped right after. So let me just reiterate this. The day before, I made a video saying that all we need is sentiment to push the stock price higher. The CCP comes out with news, which drives the stock higher because of sentiment. So then I had to make this update video. So that's what those two videos are there for. Kind of like they're paired together. One's a continuation of the other. So March 15th, March 16th. And so today what kind of happened is we saw some actual approvals of new video games, and I'll pull that up here. So like pulling it up, this article right here, Alibaba surges 11% on the backs of China optimism. There you go, China optimism after Beijing approves more video games. So just kind of reiterating, you can see all the stocks that went up. The one that I did buy as well, that I'll kind of reiterate exactly why I did what I did, is the switch from Tencent to Prosus. So if you actually take a look at the portfolio, you notice that there was once upon a time a Tencent holding and no longer. I sold it at a loss. I was able to harvest that loss and then actually buy Prosus, which actually owns Tencent as a holding company. Now, the net NAV value of Prosus and Tencent will never be equalized. People need to understand that too. But my thesis or my theory behind this is that, again, if the sentiment is, or if this prices are largely driven by sentiment, I should see greater performance in Prosus relative to Tencent at the same time. And we're actually going to test that right here. So we're going to go here. Let's go to Prosus. Prosus is up 6.81%. And this is on the Johannesburg Stock Exchange, by the way. So, and then we're going to also go on Tencent. All right, so Tencent is up actually 6.47% and 6.8%. So very small marginal difference. And I believe when I was looking at it earlier, it was actually larger. But yes, for very small marginal difference. And there was a lunch break at one point. Yeah, because it's on Hong Kong. Yeah, they do that, by the way. So basically, what I kind of want to get from this is overall, or all in all, I do believe that Prosus will have a marginal performance boost, and I was able to kind of get a tax benefit from actually selling that 10-cent position. Of course, don't copy anything like what I was doing, because you should talk to your licensed tax professional who knows your specific situation. Now, regarding that pretty much covers it. I still won't ever talk bad about these companies or the structures until they've actually recovered. And then once they recovered, I might continue to do content covering this. I've heard some sort of discussions again about dividends, etc. My only comment on that was to look at the totality of it in terms of actual issuance versus repayment. So if you actually look at it, it's still a net negative value. But regardless, the next stock I'm going to be talking about is VRTS. So VRTS is a company that's been on the list for quite some time. I just haven't really been getting to it. So this one's going to get its own video. And so just look out for that. If you guys aren't subscribed, you can subscribe to actually wait for this video. But this one should be out, sometime this week. And this one was known as and still probably is known as a deep value stock. So PE ratio doesn't look too good right now, but trust me, just the other day it was at like 3, and a dividend yield of about 4.05%. So investors are like, oh, foaming at the mouth over this. And then the next one I'm going to cover is OLLI's. So OLLI's Bargain Outlet was also on the list. And this one's reporting, I think, today. So I'm pretty sure they might have already reported. Let me actually quickly check. Did you guys report? I don't think they have reported yet. I think they're reporting after hours. Yeah, they're reporting after hours. So they should be reporting anytime soon, because I'm recording this as 4 o'clock today. So the market just closed. And yeah, they should be reporting at any moment. And we should see either they're going to pump up or not do so well, or they already did report. No, I think they actually have already reported. They have already reported. They reported in the morning. So I'm going to be covering them as well. They're similar to like a Dollar Store, Dollar General, Dollar Tree, that kind of stuff. And so just look out for that. And so on that, we're going to kind of talk about another stock, Micron. So Micron's another stock that I have been meaning to do an update video on, and I'm probably going to do a dedicated update video on this stock. So Micron is down 3.05%, similar to Intel. If you actually take a look at that PE ratio, and I'll move it to the side here, 8.64. So it's relatively cheap on a GAAP basis. They're actually paying a dividend now. When we actually put it through the model, if I actually were to do that, MU, okay, let it update. I haven't been even saying what the analysts are saying. So what are the analysts saying? Because I'm actually curious. Let me put it there nicely. All right, analysts actually rated as a buy with a $77.92% price target, implying a 13.59% upside. So the price target, today's price is $68.06. What is it priced for? Well, let's actually take a look to see if we have to normalize anything. So probably yes. So we're going to do yes. All right, cool. So it does that for me. By the way, I just normalized it over there on the right. If you guys were watching earlier parts of the video, you guys know what I'm doing there. Again, it's zoomed in for you guys who watch the videos on your phones. So from here, we can kind of actually extrapolate some growth rates. I believe that Micron's longer term growth rate could be in the higher ends, about 15-ish%, 20-ish%, depending on how crazy investments get into that category. In terms of actual buybacks, I think that overall, they've been kind of a net diluter over time. They've tried to return some capital to shareholders more recently. So let's actually do like a token buyback of some sort. Actually, let's remove that negative. Okay, so we do a token buyback of some sort, and they could actually, let's just say 1%. Let's just say that they do 1%. So if they do that kind of buyback, just change the dynamic a little bit. Regarding some other these prices, I would probably be waiting Micron in about the 50s, and then I would probably enter a position. I know that this company gets a lot of attention because of the super investors. Keep in mind, by the way, this is still preliminary. I'm just doing it off the cuff here. So, but I'm probably going to do a video on Micron update. And by the way, I would love feedback from everyone in terms of the style of the video. So this is a longer video covering multiple stocks, and then also letting you guys know what stocks I might be covering in greater detail throughout the week. This is separate from, of course, the voting stocks. So the ones that people vote for on the Discord, those will have their own video, and that's implied that they get their own content. So on that note, I'll probably cut it off here, and I'll see you guys on the next one.